Hey everyone, welcome to July, and here in Calgary, the Calgary Stampede is just beginning, and it's that time of the month to go over what took place in the month of June. But before we get into that, let's just talk about the one thing that's on everyone's mind, and that is the role that interest rates are going to play and are currently playing in the real estate market. Look, there's no question as interest rates rise, the Bank of Canada is clearly wanting to slow down the Canadian economy. We all know that inflation has been extremely high, and they're doing this deliberately. And I personally think they're deliberately trying to put the entire country into a recession. And so, higher interest rates are going to take some buyers out of the market. It's going to make it very difficult for some buyers to buy a property, which will impact the market. But it's a very interesting time. I haven't seen this in my 22-year career because the Alberta economy right now is actually doing well. And we have people moving here. In fact, it's expected that Calgary is going to have around 20,000 people this year that are going to move to our city. So we have a strong net migration. We have a pretty strong economy. And my experience has always been when people have to sell, primarily because job loss or just can't find a job, then you find sellers that are very motivated to sell. And of course, if they're very motivated, they'll reduce their price. And when that starts happening at a large level, prices start to drop. But what we're situated with now is we have sellers that are not desperate to sell because economically we're doing good, people have jobs. So there's people who want to sell and they have real estate plans they'd like to move forward on. But if you're not highly motivated to sell, well, why would you reduce your price? So this is creating a little bit of a conundrum where, who's going to win is if this interest rate does soften the market and buyers can't get in, are we going to see enough motivated sellers that'll start reducing their price, or are the sellers going to say, hey, I'm not going to reduce my price to sell. If I can't get the price I'm looking for, then I'm just going to hang on. And that could be a stalemate that we could be faced with. So I'm seeing indications of that right now, which is why the market is slowing, but we're not seeing any significant price drops. So it will be very interesting to see how this unfolds as we go forward this year. It certainly makes you ask the question, is it a good time to buy? Is it a good time to sell? I will say this, if you do have a mortgage rate right now that is fixed and you're at a really good rate, you could offer that buyer to assume that mortgage. And that could be very helpful in selling your house. So put that on the table because buyers can assume that mortgage with qualification. So there's no risk to you, the seller. And that could be very much an incentive for a buyer to buy your house and move on. Although it does have another side to that coin. And that is if you want to buy another home, and it's a low interest rate, you might want to port that with you to the next house. So there's definitely two sides of that coin, but I just wanted to throw that out there as an option. All right, well, let's just get into the stats here real quick. So here we're looking at detached houses, and you can see in the month of June, we dropped to a 55.61% absorption rate. So you can see how we are rapidly moving towards a more balanced market between buyers and sellers. I mean, that's still a pretty strong market to see 55% absorption rate. But, that now shows us 45% of the houses that were listed last month didn't sell. But as I mentioned, there's the pricing at $647,500 for our benchmark price. And, that's slightly down 0.15%, from May. So you can see we're leveling off on price. We've lost that really high demand. We're not seeing hardly any multiple offers anymore. So we're not seeing any major price increases. We're really just seeing it now level off. And it will be interesting to see where we're headed. Are we headed for price softening as I mentioned, or are the sellers going to stand firm and not come down on their price? So it will be an interesting market as we move forward coming into the fall. If we come down here, you'll see the hard numbers. There was 1,483 detached homes sell out of 2,667. So that's still a really good market. It's still a very healthy market. But keep in mind, there were still a lot of people in the month of June that had a mortgage approved at the lower interest rates as well. As we get into later July into August, all of those rate guarantees are going to dry up, and it's going to force the buyers to be into the higher interest rates. But I want to say one more thing on that too. If you're a buyer, you should look very carefully at a variable rate or an adjustable rate mortgage, because you can still get some really good rates. And it is expected that as the recession comes to an end, maybe in a year or two, rates are going to start dropping again. So I think it'd be a good option for you to think about that, because you don't have to get into these fixed rate mortgages of 4.5% to 5%. Anyway, here's our hard numbers. You can see, not much at all, 300 to 400 anymore. Those days seem to be gone. 400 to 500 is 18% of the market, and then 24% of our market is 5 to 6. So that's taken top spot now, and that really is the sweet spot for a detached house in Calgary. It's if you're looking at any home in the 500s, that's considered an affordable home in the city of Calgary. Even 6 to 7, quite impressive. That's almost 21% of the market, even higher than 400 to 500. So there's a lot of people comfortable buying in the $600,000 to $700,000 price range. And what's continued to be strong is that $1 million to $1.5 million. I mean, 5.46%. I don't think I've ever seen that large of market share in this particular price point. So there's a lot of people that are comfortable buying luxury homes. And I'll tell you, for someone who owns a brokerage, I see all the files coming through, and I have been quite impressed and surprised at how many people are buying luxury homes and they don't need mortgage financing. That says a lot. And I think it also says that people are comfortable putting their money in real estate. We are on semi-detached homes, and we got a 54% absorption rate, so almost the same as the detached market, which is good to see. Our benchmark price stayed strong at 581,600, just down slightly, less than half a point overall on the price point. So that's holding. We come down to the hard numbers. 223 out of 413 sold. So we've dropped from the 265 we sold in May. We dropped from the 304 we sold in April. So it is a softening market for just for the sheer volume of sales. But like I said, the prices are still holding at this point. And you can see our market distribution: 300 to 400, 20% or 21% of the market. 400 to 500 is almost the same. So, the sweet spot is anywhere from $300,000 to $500,000. That's a pretty healthy, strong market. But as I always say, when I look at these stats, it is amazing just how comfortable people are with semi-detached homes. That's really become a big part of our market, and people have really adjusted to that. And they are a little bit more affordable. You get a little bit more house for the money, and people have really embraced that. And obviously the infill market continues to be strong. I mean, literally 10% of our market is $700,000 to $900,000. And even the fact that you go into $1 million to $1.5 million is 3.68% of the market. And it is impressive how many beautiful semi-detached homes have been built in the inner city. So I think even despite the fact that a lot of people moved to suburbia over COVID, there seems to be a pretty good demand of some of these people to go back. In fact, even I just sold a home in Bridgeland to a buyer, and they were living out in Crestmont, and they were just tired of suburbia. They really wanted to be where everything was walkable, and they bought a semi-detached for $900,000, and they were very, very happy, and they just absolutely love it. I talked to them the other day, and they're so comfortable with their decision. Here we are looking at townhouse condos or row houses, and to my surprise, I mean, wow, 69.46%. It's so funny that it was just a few years ago that this market was only at about 16% absorption rate, and now it's exceeded single family dwellings. But there's a reason for that. This is definitely affordable, and I think when you look at townhouse, semi-detached, row house, whatever you want to call them, They are, you get a basement, you get your own front door. Oftentimes you get a garage. So, it's about the best next thing to a home without having to pay detached or just semi-detached prices. But with row houses or townhouses, typically they are condos, so there is going to be a condo fee that's going to cover the exterior and all the exterior ground, snow removal and that sort of thing, and insurance. So there's value that you get in that condo fee. $363,700 is the benchmark price, and that actually went up a little bit, month over month, and up a strong 15.9% year over year. If we go to the hard numbers, you can see 555 out of 799 sold. So, I mean, it stayed steady for volume from the previous month. No question that people are comfortable with this. I also find a lot of investors really like buying these too, because again, the price isn't overly high and the rents are pretty good. A lot of people rent these properties as well. So they do make good investments, and they do make really good starter properties to get into the market and then eventually move up. You'll see the market distribution here, 300 to 400,000. There is your sweet spot, and there is a lot of townhouses in Calgary that you can get into, nice ones for $300,000 to $400,000. And there's no question, once you get past 500,000, most people start thinking semi-detached or just a detached home. So that's why I think it'll always be, about 100 to 150,000 less than semi-detached or detached for the sweet spot on that product. Here we are for apartment condos, and it's just so good to see, that this absorption rate is still doing pretty good, 38.07%, down from 44.56% from the previous month, but still pretty good for apartment condos. With the prices rising, there's just a lot more first-time buyers and people downsizing that want to get into something smaller and enjoy the condo lifestyle. And it's good to see that we're seeing a lot of that market continuing to come back. Our overall benchmark price at $277,400, so it was slightly up, month over month, and 0.76%. That's good. Year over year, 9.77%. The only thing is, I've actually had several people call me in the last couple of months who bought their condo in 2015 at the peak, and you can see that it was $292,000. So you see, we're not quite there yet, and there are. I do know I've got probably 10 clients that are just waiting for that market to get back to what they paid for it, because they'd like to maybe move up to a townhouse or a semi-detached, but they don't want to take a loss on what they paid. So we still haven't got back to those levels, but who knows? Maybe we will get there, even despite these interest rate hikes. It's very possible, because it's just affordable to get into that product. 581 out of 1,526 sold. So still just a really good, healthy market. Our market distribution, well, clearly, 47%, 200 to 300,000. It's just so interesting to see how that goes. Hey, the 4 to 500 is the strongest, is in the detached, and then in the semi-detached row house, 300 to 400, and then another 200 to 300 is the apartment condos. It's just funny how that just goes. But this is where a lot of first-time buyers are, and this is where a lot of people are downsizing. I downsized 2 people last month from their houses that kids are growing and they just don't need the big house anymore. Put them into a really nice condo for $350,000, and they banked all their profit from their house that they've owned for quite a few years. That is becoming a pretty normal trend. So I think you'll find this was pretty helpful. It kind of gives you an idea of where we're at. And my best advice, as always, if you are really considering buying or selling, just reach out to me and I'll give you some advice. I'll look at your personal situation. I'll look at if you're buying, what you want to buy, where you want to buy. I can analyze that with you as to what opportunities do exist for you. And if you're looking at selling, same thing. Always remember real estate is based very much on the community you're in, the type of home that you have, the condition that you have. Every situation is unique. Even last night we sold a house in Tuscany, and we evaluated it at $539,000, and to our surprise, we sold it with multiple offers, and that's not something we're seeing very much of. So, that's the sort of thing that can still happen, and that's why we have to really look carefully at each particular property and give advice accordingly. But there are great opportunities right at this moment still to sell your house for top dollar, and there's really good opportunities for you to buy a house right now too, and still get into a reasonable interest rate. All right, have a good month, everybody. Look forward to seeing you next month.